Hi everyone, this is a technical analysis on USDJPY. Let's start with some fundamental background first. In the US, the Fed left interest rates unchanged as expected at the last meeting, while dropping the tightening bias in the statement and adding a slight pushback against the March rate cut. The US CPI recently beat expectations for the second consecutive month, with the disinflationary trend reversing. The US PPI beat expectations across the board by a big margin. The US jobless claims beat expectations with the data remaining steady. The latest US PMIs increased further from the prior month, with the manufacturing PMI beating expectations and the services PMI missing. The US retail sales recently missed expectations across the board by a big margin, and the market now expects the first rate cut in June. In Japan, the BOJ kept its monetary policy unchanged as expected at the last meeting, with interest rates at negative 0.10% and the 10-year JGB yield target at 0%, with 1% as a reference gap. The Japanese CPI today beat expectations, although all measures eased further from the prior readings. The latest unemployment rate ticked lower, hovering around cycle lows. The Japanese PMIs improved for both the manufacturing and services measures, although the former remains in contractionary territory. The Japanese wage data missed expectations again recently, although there was a pickup from the prior reading. The market expects the BOJ to hike rates in Q2. Now, on the daily chart, we can see that USD JPY is getting closer to the cycle high around the 151.90 level, but has lost some upside momentum recently. We've been stuck in a consolidation since the hot US CPI release, and despite more strong US data, the pair hasn't managed to sustain a rally. We can see that we have a trend line here defining the current uptrend, and we can expect the buyers to lean on it to position for a rally into the cycle high. The sellers, on the other hand, will want to see the price breaking lower to position for a drop into the 148.80 support. On the 4-hour chart, we can see that the price got rejected here near the recent high at 150.90 and extended the drop today following the bid in the Japanese CPI data. These inflation figures shouldn't change much at the moment though, so the main trend will still be dictated by the strength in the US data. Nonetheless, it's clear that the pair needed to take a breather given the rally in the past few weeks. On the 1-hour chart, we can see that the latest leg higher here diverged with the MACD, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, it should be a signal for a pullback into the trend line around the recent swing low here at 150.25. This is where the buyers will look for a bounce and a rally into the cycle high, while the sellers will seek a break to the downside to target the 148.80 support. This week, we have some important economic data on the agenda. We begin today with the release of the US Consumer Confidence Report. On Thursday, we will see the Japanese industrial production and retail sales, and later in the day, the US PC and the latest US jobless claims figures. Finally, on Friday, we conclude the week with the Japanese unemployment rate and the US ISM manufacturing PMI.